Hello everyone. By now, you all have the data regarding the companies is already available, and you might have performed some sort of analysis on the content theory part. This is a practical part, which is calculations will be included here. However, you will not calculate anything. You will just populate data that is for which the names are given here. Okay, I will tell you how you can populate this data by just populating this data in for company 1 and for company 2. You can generate these values. Okay, so according to the given document, you are supposed to perform financial analysis for the company 1 and financial analysis for the company 2, and based on the analysis results and interpretation, you are supposed to compare and make an investment decision regarding the company which is best for your investment. Say, for example, this is Amazon and this is Google. So, among these two companies, based on the ratios that you have calculated, which company is best for your selection, that has to be identified. So, that is the ultimate goal of completing this document. So, here what we do under company financial analysis, we will be calculating different type of ratios, which include liquidity ratios, which speaks about the leverage of the company. Okay, leverage of the company will be understood. Asset management ratio, how the assets are utilized by the organization, and then debt management. Oh, sorry, this is liquidity, regarding liquidity. Next one is profitability ratio and market value ratio. These ratios are to be calculated and interpreted. Under these, each type of ratio, we will be having again multiple ratios. So that we will be calculating in the Excel sheet. So if you cross check here, under liquidity ratio, there are three different ratios. At least two has to be selected. So whatever the ratios that are mentioned here, among all, at least two different ratios has to be taken by the person to explain how the ratios of the company, how the financials of the company are explaining its performance. So, however, under profitability margin, you are supposed to select at least four. In that, ROA and ROE is mandatory, and remaining under remaining three, any two can be selected by you. So, it's up to you what you select. Got it? So, uh, now let us try to understand how to include the values. Now let us see, this is a balance sheet. These values are from the balance sheet. Okay. And these values are from income statement or statement of operations. So it will be available in different names. You actually you are supposed to take these values from annual reports, but here I will help you out to make it simple and exactly access values from some other website. The website name is morningstar.com. So I'm mentioning here. So the name of the website morningstar.com. So this is morningstar.com. Okay, just I'm pasting here, and I will also include it in uh, the mail that I have sent you. So I will be including it there also. Okay, so just open morningstar.com. So I opened it. In morningstar.com, the Amazon code. So for example, I want to select Amazon. So Amazon ticker is AMZN, Amazon. So this is Amazon company. So otherwise, you can give full name also, AMAZON, Amazon. So then you will get Amazon INC like this here. Just click on it, and you can see different tickers over here. In this, you are supposed to select US securities. Under US securities, so you are having this XANS or Amazon, just click on it. That's fine. Okay. So by clicking it, you can see the Amazon details, Amazon related details. Under that, click on financials. Here it is financials. Just click on financials. So you can see different data. Again, under operating profit also, you can see several financial analysis related data will be there. Okay, so these are some of the important information related to your company. But however, we will be calculating things from financials. Just click on financials, go down and click on expand detail view. You will get different data. Just check here. The values of table started from 2023. So, but we need it in this sequence 2019 to 2023. Here it is in decreasing order. So there is some symbol like this here. Click on it. It will transform it into different format. Okay, 2019, 2021 like this. Okay, just go down, scroll down, and you can see the data for all the different years. If you scroll it here and there, you can see some proper details regarding that. Okay, so now let's cross check for data. So now first, from where we are supposed to get that from current balance sheet. Okay, so here there is name balance sheet. Click on balance sheet. This is income statement. Under financial statements, income statement, balance sheet, and the cash flows. These are three elements. Just select balance sheet. Just scroll it down. So now just you need current assets. Current assets is total current assets. That is 96.334. 96,334. So let's write here 96,334. Next 132,733. 132,733. Let's add it. Okay, 161,580. 161,580. Next it is for 2022 146,791. 146,791. Next again for 2023, just need to check this. 172,351. 172,351. So these are the values for current assets. Next, let us check for now. Let's check for cash. Cash, you can get it from balance sheet only. So in this total assets, current under non-current assets, just so make sure these all are reduced. Okay. So what I do is where the arrow symbols are there, just to minimize them. It will be easy for you to get data directly. Okay, so capital lease just minimize, operating lease minimize, everything just try to minimize it. Okay, so now this is actual things. Okay, so in total assets, just cross check open under current assets, just cross check cash. Okay, so this is cash and equivalents. So just take values of cash and equivalents. All right, so under total current assets, cash and equivalents, just collect the data. 36092, 36092. Then it is 42122, 42122. You're supposed to take your own values. Okay. 36220, 36220. Next 53,888, 53,888. Next 73,387, 73,387. For marketable securities, just cross check short-term investments. Click on short-term investments, you will get value. This is 42,274. 42,274. Then let me add remaining values. Now just added market securities, which is short-term investments. Then I will go with accounts receivable. Let me check accounts receivable. in the same area, just close current assets, total non-current, sorry, under total assets, under total current assets, you will see trade and other receivables. Okay. So trade and other receivables account, this you are supposed to take. Okay. This is the values, trade and other receivables current. This value you are supposed to include in your notebook, that is from 2019, say you are supposed to add it 2816 25 5 24 542 24 542. Then let me add remaining element under total current assets, minimize all those things and just check inventories. Under inventories you are having values, so just add them 2497. These values should be added, inventories values. So first value is 2497. So just added all the values up to 3318, just added it. Now let us check with total assets, any total assets value. So for total assets, just click on total assets symbol here. Total assets is provided here. Okay. So just add total assets values. This is total assets. Let me add them 225248. Just added it, and I want to add remaining items too. Remaining values should be added for 2022 2023 tak. I want to add it. Okay, 321195. Let me add and come back. Just added all the five values from the sheet that is available. Next, let us cross check with current liabilities. So total equalities under current total liabilities, just click on total current liabilities. This is the area you can get. Just when you minimize this to all, total current liabilities will be shown here. Okay, so remaining I will be closing it. So just total current liabilities, I can check it, and let me add it. 87812, 126 385, 126 385, and 142 266, 142 266, 155 393, 155 393, and last value 164 917, 164 917. So we can check it. Some of the values are getting already adjusted by the values I'm including. These values are getting calculated. Okay. So next it is total debt. Total debt will be the total equity debt management. Total debt. Let me show you 1 second. So you can see total debt under total non-current liabilities. In that you get a long-term debt. Okay, this is the value of your total debt. Okay, so just add total debt values. Let me minimize other things. So in this, you are supposed to add long-term debt values. Okay, so can you click on long-term debt values? This is for 2019, the value is 23414. So similarly, like you are supposed to cross check for your company. Just as a simple example, I'm taking 31816, 48 744, and I'm taking the remaining values to 61150, 67150, and 58314, 58314. Next, it is total equity. Total equity is straight away below total liabilities. You can find total equity. This is 93,404, 93,404. Sorry, I'm supposed to get from 2019. Total equity is 62,060, 62,060, 93,404, 93,404, and 138,245, 138,245. Next it is 146,043. Next it is 201,875, 201,875. So by this, all values from balance sheet are included. Now let us go to income statement, and include values. This is income statement. As it was mentioned earlier, just to minimize all the tabs so that you can see them in a simple form. Okay. So wherever you want your information, we will be including them. Okay. So this is a simple form of whatever the document we have. So this is income statement. Just first for revenue, COGS, gross profit. So gross profit is already given here. So just include them. So first, this is the gross profit. Here we have gross profit. Let us include it. Okay, 38,823, 38,823. Next, 38,823. Next, 51,500, 51,500. All these values are in millions actually, so I'm just adding them. Okay, 66,315, 66,315, and 67,640, 67,640. Next, the final value is 93,805, 93,805. This is gross profit. Now let us see what is there inside this one, gross profit. We have total revenue and cost of revenue. These two values are required here. Okay, total revenue and cost of goods sold is cost of revenue. Revenue is nothing but sales. Cost of sales is nothing but cost of goods sold. Okay, so both the values you are supposed to take. Now total revenue, for total revenue, just cross check and take values. It is in minus value, but you are supposed to include it in as a positive value. 241,699. Total revenue I have to take 280,522. 280,522. Next one is below one is I can take both the values at a time, but let me take revenue value first. 386,064. 386,064. Next, 469,822. This one total revenue under 2021 it is 469,822. 469,822. Next one it is 513,983. 513,983. Next it is 574,785. 574,785. So this is how I included it. Again, I'm taking values from cost of revenue. Cost of revenue I'm taking as 241,669, 241,669. Next it is 334,564, 334,564. Next it is 403,507, 403,507, and 446. 343, 446, 343. Next, and the final value is 480,980. 480,980. So next one is operating profit or EBIT. So we are straight away having pre-tax income detail, operating uh, pre-tax income, that is profit before income tax. Okay, so this is the pre-tax income we are having. If this is not available, you can take operating income or expenses, right? So pre-tax income, these values have to be taken straight away. If it is a negative value, you are supposed to take negative value. Okay, uh, let's check. Let's calculate it. Okay, pre-tax income 3976. 3976. So 3976. Next it is 24,178, 24,178. Next it is 38,151, 38,151. Next it is -596, -5936 minus 5936, and next it is 37,557, 37,557. So here you check, if the value is negative, we straight away took it is as negative. Okay. So make sure you take it as it is for profit. Okay. Next, net profit is also similarly we take. You are supposed to take the way it is. Okay. So non-operating income or expense, total operating net income. Net income is now the final one is net income. Net income, I want you to take this value after provision of income tax. You will be left with earnings from equity interest, and finally you will be having the net income. This value is net income value. So we just include this value. So 1588. We just cross check. This value is the net income. So otherwise, you just take this one. Net income available to common stakeholders. Common stockholders, or whoever having the stockholders. For them, this is the net income that is available. So just you mention these values. Okay. So 1588. So under non-operating profit expense, below that we will be having a pre-tax income. After finally, before the income statement supplement section, you will be having the final value that you can take as net income value. So that should be 1588, 1588. So if nothing is mentioned here, so usually it will be mentioned. If nothing is mentioned here, any line that is filled among these five elements, net income, net income, net income is there right here. So among these net incomes, any value you can take. Okay. 1588, 21,331, 21,331. Next, 33,364, 33,364. Next, it is 27 minus 2722 minus 2722. Next, it is 3425. 3425. So simple activity. Once you did it, next you can work on the other company. So for this is these are the values for Amazon company. And now you can see all the ratio values are calculated. Okay, each and every ratio in the sheet is calculated. By default, they will be calculated because I have included the formula. For market value ratio, there is nothing populated because this we are supposed to get it from internet. Okay, so what I do is like I will go to just one page, Google. So P by E ratio of XYZ company. Amazon last 5 years. So just open any like this. In this area you will get it. Okay. So whatever the chart you open, you can see it. Just simply include the values. Okay. P by E ratio for last 5 years. Yeah, I don't see here. So let's see in another one. This one I have the value. So Finbox is generating the value. But anyhow, you can cross check internet. You can get it some values like this. So this is in Findbox. So you will get it. So Wipro. Just check for some other company, you can get a P by E ratio value. We are getting for any company that is trading on Amazon, trading on US securities, you will get value. Just mention the name here. Okay, Amazon, AMZN, Amazon. For Amazon, we are getting P by E ratio like this. Okay, I will be sharing this link. I will be sharing this link just to mention the values. Okay, so that is 78.2 in 2019. It is 80.7. 80.7. Next, it is 94. Next, it is 64.4. Next, it is 75.7. Next, it is 78.2. So next, let me check dividend yield values. Similarly, we can find for dividend yield. So you'll get from stock exchange also, you will get some data. Just search for it and you get some data related to that. Okay. So it's a simple task. These values are directly available from internet, so I'm not calculating them because it includes a bit little complex activity. So because you are supposed to take average share value and lot of other things. So just cross check internet, you will get some values. Okay. So in 2019. So Yahoo Finance is providing better value, I guess. So this is generating some better values. What is for P by E ratio, P by B ratio, everything is available here. Okay. One thing, ignore this one. I'm removing this one from the list. You just ignore it, the remaining all you okay. So ignore dividend. Usually you will get it, but as it is showing somehow some difficulty, just ignore that. Okay. So just take a P by E ratio. Otherwise, you can take the current dividend value you can get easily. So for the both the companies, you are supposed to calculate values. All right. So market value P by E ratio, you just consider it, and for each value, you are supposed to interpret how the value is changing and what impact it will be having. So how you can cross check it, return on assets, whether it should be increasing or decreasing. So let me interpret. Okay. So I will tell you. So the current ratio should be more. Okay, this should be more. If it is larger, the company is performing good. If it is lower, the company is not performing. Okay, it is underperforming. When you compare both the companies whose current ratio is more, that will be given more priority according to the current ratio. So regarding this current quick ratio should be more again. Okay, so this should be more larger rather than telling more. Let us say larger. Larger is best. Okay, so larger is best. This one larger is best, and this is also larger is best. Okay, so I hope you understand because um here the denominator value is current liabilities, which is a negative one. So uh, the liabilities are negative and assets are positive. So you are supposed to get better value. Okay, so when the larger is the value, your company is performing good. Now let us see how it can be interpreted. I will simplify it, but you are supposed to get information from online too to refer your work. Okay, so based on these values, you can see that over a period of time, the value is reducing, which is a negative sign actually, because the larger the current ratio, it will be considered the best performing. Okay, the performance will be best when the value is larger. So considering the quick ratio also, we can see that whenever the value is larger, when at that stage the company is performing best. So here, because the liabilities are under below and positive thing, assets are higher. So with the liabilities, whatever the liabilities we are having, what are the assets that we are creating, that is assessed here. So with minimum debts or minimum liabilities, you are supposed to create maximum assets. So the denominator should be always lower than the upper value. So uh, based on this, we can say that larger the value, we can say the company is performing good. So regarding asset management value, it is also same. So to what extent we are generating, what are the assets we are having by using it, how much sales we are creating, that we will be calculating. Okay, so in both the aspects, considering the asset management ratio, you are supposed to uh, have a better value. So larger the value, these ratios are said to be good performing. So under debt management ratio, so debt to asset ratio, whenever the debt is top, so, when total assets is under denominator and total debt is at the top, at that position, you are supposed to say that the assets should create less debt. So the value should be lower. Okay. In equity should generate lesser debt. So the same formula we are used, and we say that whatever the debt to different ratios are there, they are supposed to be lower. And again here asset to equity ratio, this should be the larger, because with the equity that we are holding, we are supposed to create larger assets. So this is how it works. And the profitability margin, everything should be large. Only when the value is large, then we say that the company is performing better. And regarding P by E ratio, when we say that when the value of P by E is larger, it means that the stock value will be larger and it will be difficult for the investor to purchase it. So lower the P by E ratio, the possibility of investment will be high. So the P by E ratio should be lower to ensure that the company is good. Okay, good for investment. So these are interpretations. I hope you understood. Just make sure you include values in the same manner, and complete it. Okay. So make sure you work on the document properly and you interpret it and you write enough analysis on the document and complete document perfectly. And you share documents to me, and we will be appending it to complete forming the actual document. All right. So here what we do. So in the document under liquidity ratios, you select the current ratio, and you will be copying and pasting the table here. So you will mention current ratio for the company, first company, and you will be mentioning the table. Then you will be interpreting. In 2019, the company value, current ratio value is some XYZ, and over a period of time, the value increased and decreased, some ups and down it has seen, and finally it went to become some XYZ ratio. So considering the ratios, when compared to 2019, it is reduced or increased, whatever it is. Based on that, whether it is a good sign or negative sign, that you will be explaining. So hardly 50 words for each ratio. you are supposed to discuss in maximum 50 words. Okay. So in this way, you will be explaining both the for both the companies, you will be creating different ratios and the ratio interpretation will be done. And finally, you will be making a conclusions based on the comparisons you can make from the inferences that you have created from table analysis. Okay. So just make sure you interpret, compare, and conclude about the values. Right. So that's it from my side. Just ensure that you properly work on each and every ratio that is mentioned in the video and provide a proper comparison, then make a proper decision regarding the company in which it is good for the investor to invest money. All right. Thank you very much. Take care.